losing trades, winning trades, break-even trades. None of that really matters if you don't have a set of rules that you trade consistently in the markets and you make sure that you follow them to a T. That is basically the central focus of today's video. So last week I had two trades on Euro USD. One of them was a winner. The other one was a loser. Well, the first one was a loser and the second trade was a winner. But what I wanted to highlight is basically the importance of sticking to your rules when it comes to the market, because if your main goal is to be consistent, you have to make sure that you stick to your rules, right? If you don't have any rules, I suggest you basically take a break from trading live if you're trading live already, and try and develop a trading strategy that has a predefined set of rules that you can follow on a day-to-day basis, week-to-week basis, and a monthly basis. So I'm not going to waste any more time. I'll jump into the charts and show you what we've got. So starting off on the charts, you can see that I've basically marked up my charts, and typically what I like to do is to basically leave my chart marked up, because I like to know, levels that I was interested in the past and how price reacted from those levels. So starting off, this first trade, I posted it on my Instagram page, basically showing what I was expecting. Now, the first to start off with, we had sellers basically selling hard as price was going down. But what happened was these sellers got overtaken by these buyers. And you can see aggressive buying here, and then aggressive buying here, and another wave of aggressive buying. So basically what I was expecting was, I was expecting this market to turn around. Now, I've explained how I usually do my top-down analysis, because I did have some top-down analysis on this trade. It wasn't just these wave of buying. So you can watch previous videos to see how I go about analyzing from a top-down perspective. But basically what I was waiting for was this market to actually turn around, and I highlighted my zone right around this level based on these buyers and these sellers, right? Because what I usually want is price to come back into the trading zone where these buyers are and where these trapped sellers are, basically giving this trapped sellers the opportunity for them to get out at a break even, and these buyers to basically add to their position for the up move. Now, another thing that we had was this harmonic pattern. I don't typically trade harmonic on lower time frames. What I like to do is I like to sit on a higher time frame as part of my overall top-down analysis, for price to actually go in the opposite direction in a continuation trade. But what I like to see as well on the lower time frame is I like to see multiple confluences. And basically what this harmonic pattern was, it was an additional confluence to these buyers and these sellers right here. So what happened was, as soon as we got price come down into the level which I was expecting price to come down to, what you see is we immediately got a massive push. Now, typically on harmonic patterns, this is something you would see. This is the kind of reaction you see on a harmonic pattern completion. So that was the initial wave of buying that I saw at my zone. Now, if you've watched some of my previous videos, I like to see aggressive buying, right? So this was the first initial confluence that I saw, and I was like, okay, this zone is holding, right? And then after that, we got several attempts from sellers to push price below the zone, and you can see we had multiple absorption going on. Then we had the PMI numbers, right, come out right here, and you saw this wave of selling. Now, this was positive for the US dollar, right? So we had a positive PMI numbers, and what I was expecting was Euro USD to basically go down after that. But unfortunately, I already have my strategy, right, playing out. So I have to follow my strategy. And if price doesn't go to my expected take profit, what I then do is I look for other opportunities. But at this point, I'm not breaking my rules just because I saw that there's something that could counter, right, my analysis, because I've already built up several confluences from the higher time frame perspective all the way down to the lower time frame. So I decided that, you know what, I'll stick to my rules. If I see aggressive buying coming in, especially after this strong wave of selling and we couldn't break below the zone, I basically stuck to my rules and I decided to get in right on this after I saw this bullish candle come in, because we had a rejection here and then we had multiple buyers coming into this market, and that's when I got involved. Now you can see immediately we did get a push and price, you know, kind of got halfway to my take profit. But as soon as I saw this rejection, right, because these buyers couldn't close near the top of this candle, I knew that, okay, there's a potential for price to change direction now. But what I did not do, right, is break my rules and say, oh, because I see sellers coming into the market, I'm basically going to move my stops to break even, or I'm going to close out the trade. No, because for me, if I've committed to the trade, right, I've committed to my strategy, committed to my analysis, and I've basically committed to my take profit target. So I decided that I will stay in this market and see what happens, right? And lo and behold, we got a massive wave of sellers that came in, and then I got stopped out for a loss, right? So that was trade number one. Now, one thing I wanted to go over is I see several people, you know, that I coach from time to time, and one thing that they like to do is they get married to their analysis, right? It's almost like this trade is the end all be all. They move their stop loss lower, and they think by doing that, right, they're giving the trade more chance or more room to actually play out in their favor. However, like I said, it's very critical that you stick to your rules. And this is something that I do day in, day out. It takes a little time, especially if you're new to trading, right? It takes time to trust and have faith in your strategy. But at the end of the day, the only way you're going to cut the journey short is to actually be consistent in following your rules. So at this point, I didn't think to myself, oh, you know what? I'm not going to take the loss. I'll move my stop loss a bit lower, because I know that, look, price could potentially keep going down. And also, I know that I'm not always right? That's another thing, acceptance. I accept when I'm wrong. I don't just stick to my trade bias and think, oh, it has to play out. No, it doesn't have to play out. The market will do what it wants to do. And, you know, that is that. You don't have to always be right. Okay. So that is the one important thing that I wanted to go over. And that was basically my loss on this trade. And I posted it on Instagram as well. I posted the loss. But what happened was, the next day now, the market presented me with another opportunity. And that's basically what it is, right? So when you take the loss, you dust yourself up and look for another trading opportunity, not a revenge trading opportunity. You take your time, absorb the loss, and then come back to the market another time, another day, whenever it is, and look for another chance for your strategy to play out. So the second strategy that I have is basically a trend continuation. So the first initial trade setup was a trend reversal. Basically, this was a trend reversal. If you go back to one of my videos, I think it was on GBP JPY, that was basically a trend reversal, and prices since moved drastically from my entry, right? So that was basically this first setup. In this instance, it did not work out in the way that I wanted it to. So what I saw was I built my bias based on the news, the PMI news that came out, because I was like, okay, well, if price doesn't continue to go in my direction, I was basically expecting the market to become bearish based on the numbers that came out. So strong USD numbers means USD should see some strength coming in. So second day, what we saw was, as soon as London session opened, we saw drastic amount of selling coming into this market. As soon as I saw that, I basically posted on Instagram that, look, I'm looking for sellers to basically hold this market, because I analyzed again from the higher time frame and I saw that there was multiple multiple confluences to the downside, right? So, like I said, I'm not afraid to admit when I'm wrong. And in this instance, I was wrong and I was looking for sellers. So as soon as I saw the sellers coming in on Wednesday, I said to myself, if these sellers hold, I will basically love to take the market on a trend continuation to the downside. So here's what happened. So we had price pushed down below the zone where I was trying to get in. And then immediately price retraced, right? Which is what I was looking for. But guess where it retraced to? Go back to the zone and look. Remember here, just before the news where I was basically interested for buys, we had a lot of trading going on. Now, I've explained this before briefly, and this is basically auction market theory, right? Buyers and sellers are basically transacting in this area. And then what we had was we had the bulls try to push up, but then we had more sellers coming in because based on this news, the bears saw this as a fair price for them to get in to then take price to a lower, because at that point price was cheaper for them to get involved. And immediately what we saw a drastic push to the downside, right? So when price retraced on Wednesday back into that level, guess what I'm thinking now? I'm thinking there are certain people like myself who decided to not take profit when price went against them. So when price retraced after I saw this selling and I saw these sellers as well, I'm like, okay, not only are these sellers going to hold their positions, but these buyers, right, who like myself were expecting price to push up and price has gone against them now, they should be also taking profit at break even. But not only that, guys, remember, there's these buyers as well. These buyers as well, they've been waiting for price to get back above this level, right? Because if they were holding when price got to this level, surely they will still be holding when price got back to this level. Well, not surely, but it's a high probability that they were still going to be holding when price got back to this level. So these guys as well, remember price has gone against them now even further. They should be also selling the market as price retraced back to this level. But not only that, we've also got these same sellers from the previous week's Friday that were basically stuck on this level. Now, if they decided that they wanted to hold on to their selling position, depending on where they place their stop loss, because remember, we had been in a downtrend all along, they would also be holding the line in this position. Now, all of that is based on this zone because price had broken out after multiple buying and selling action in this level. So those were the things I was looking for, right? That gave me the conviction that it's a high probability that price might tank from this level. So another thing that I did was, if you remember back in my GBP JPY video, I said I love the 78% retracement. So if we draw our fibs, look what we have, a perfect rejection from the 78% fib retracement level. Like I said, it's a great level. I always look for price to retrace to the 78%, but there's also a need for other confluences as well. Like I said previously, don't say I told you that the 78% is the best Fibonacci retracement level. No, but what I've seen in my experience is price tends to respect the 78% retracement level. And a lot of times what happens after that is price then pushes in the other direction and it keeps going, as you saw on my GBP JPY video. Once again, I'll stop bringing that up. Anyway, so I saw that price retrace to the 78% level and we had multiple rejection from that level. Remember, we still got the zone in the background that adds to our bias, right? Now, another thing that I want you to pay attention to is look where price retraced to and couldn't break out of. Basically, London open, right? This was London high. Price couldn't break London session high. And immediately we got the move to the downside. And that's basically what trading is, guys. Like, don't be afraid to admit when you're wrong, right? Because you've set your stop loss and you know, okay, if price hits my stop loss, I was wrong on this trade. And that's basically what happened the previous day. And then on the following day, we had the opportunity, right, to get back in. And this wasn't a revenge trade. This was me basically looking at the chart and looking at market behavior and buyers and sellers, because you have to remember buyers and sellers are the ones that basically move market, right? So you have to look at their behavioral patterns, and you have to think who's getting greedy, right? Who's fearful at certain points in time. And that is basically how I got into this trade. And I knew that there was a high probability for price to continue to sell off. So the targets, as always, guys, you already know I like the Fibonacci extension. And you can see we had our first take profit at this level. Well, to be honest, I basically stuck to the first take profit. I don't do multiple take profits. I like, taking majority of my profits depending on what the risk to reward is. So here you can see the risk to reward was basically a 2-to-1, right? So I took my profits and I was done, right? I made back the loss from the previous day, but not only that, made some profits, and I ended the week in profit. And that's basically it, guys. It's that simple. Admit when you're wrong, accept the loss, and come back another day. Use risk to reward in your advantage. So risk management, you make sure you implement risk management, and that's it. And guys, let me show you something. Look what happened after that. Look how far price went down. About a 6-to-1 risk to reward on this trade. But like I said, I don't always shoot for the maximum take profit. I like a smooth equity curve. And yeah, guys, that was basically it on this trade. I hope you've learned something. Oh, one more thing. I have to bring up VSA. So if we go down to our VSA chart, where we had the 78% rejection, my favorite VSA setup, the up thrust. We had an up thrust, and let's quickly read through this section 1 second. So what is the up thrust? The up thrust is a money-making maneuver by the market makers to catch stops of those who are short and trap the unwary into buying. Prices are marked up at the open, often on good news. High volume shows selling by the professionals, while low volume shows their lack of interest in the upside. The bar resembles a telegraph pole. So that is basically the up thrust. This is one of my favorite VSA setups, right? And you can see it happened right next to the 78, sorry, not next to, it happened right on the 78% retracement level, which, like I said before, that's my favorite fib level. And yeah, that was basically it. That was the last confluence that I had on this trade. And yeah, so guys, that's basically it on this one. I thought I'll quickly go over that. I didn't want to make this video too long. But yeah, so guys, make sure that you follow your rules. Have a predefined rules that you have a strategy or multiple strategies if you like, but make sure you stick to your rules, because the market will always give you an opportunity to make back your losses, right? So that's it on this video, guys, and I'll see you guys on the next one. Take care.